Good morning, everyone. This is Royalty Exchange, and it's our session that we're holding for July. We just hit the broadcast button, so we're going to take us a minute to allow everyone to dial in or sign in. And once we're ready, we're going to get started. Just give us about 30 to 60 seconds here, and we are going to get underway. Thanks for joining us today. Everybody, thanks. Investor office hours for the month of July. We're going to go ahead and get ourselves started. 1 second, I might have some internet issues here, so I apologize if I break up as we go along. But basically, we hold these once a month. The idea is that we will, we usually start off these sessions with a short presentation about a topic or some insights or another that we think might prove helpful. And then we go right into questions. We handle the questions in two different ways. First is we tend to, well, first we'll answer any questions that you might have about what the topic that we are presenting on to start with. And in order to do that, at the bottom of your screen, you will see a Q&A button. You could use that to submit your questions, and that'll put the questions into a queue, which we'll get to at the appropriate time. So that is how the Q&A process works. So again, we'll start with any questions you have about the topic that we present on. Next, we will go into answering the questions that were left in advance at the point of registration, and then we'll close off by answering any questions that you might have. Also, again, in the Q&A system. So basically, at any time, if you have a question, put it into the Q&A box. Chat feature, monitor that Q&A button at the same time, or I'm sorry, the Q&A box at the same time. So please default your questions to the Q&A option rather than the chat. It'll make it much more likely that I'll see the question and be able to address it with the staff here. So with that, here with me today, my name is Anthony Bruno. I am the Director of Communications, and I sort of moderate these sessions. With us is Ryan O'Connor. He is our Head Financial Analyst. We have Robert Bernard, who is our Chief Counsel. And today we have a special guest, Reed Jackson, who is going to dazzle us with his brilliance on a very interesting bit of data that we analyzed lately. So actually, let's go ahead and get started right into that. I'm going to do a quick I'm going to hand it over to you, okay? Basically, what we've done is, many of you are probably familiar with this option of standing orders. It's the ability for you to place an order that outlines the type of royalty asset you're interested in buying. The dollar age of it, it's what multiple over the last 12 months you're interested in paying, the dollar amount, and so on. And you can leave these standing orders, and then we automatically match them to either incoming catalogs or catalogs on the secondary market. What Reed has done is an analysis as to the types of orders that have been left, the multiples left at each dollar age possibility, and basically shows where there might be a lot more orders for one type of royalty asset versus where there's opportunity to place orders where there are fewer, not just fewer, but also orders that have maybe less of a competitive offer made. So there's more room for potentially making an offer that could get more immediately accepted. I probably butchered that completely. So I'm going to hand it over to Reed. And Reed, why don't you explain a little bit better what you've put together here? But anyway, just to kind of cap it all off, the idea here is that we want to help you identify how to place a standing order that has a greater likelihood of being accepted, so they're not just sitting out there indefinitely. So Reed, I'm going to hand it over to you.
Yeah, no, I think your setting it up was pretty succinct.
Well, thank you.
As far as what we're looking at, and we're always just trying to provide more information because that makes our marketplace function better. People get better offers, and investors can acquire more royalty assets, which is really our end goal. So just to go a little bit more in depth with what Anthony was saying with his intro, it's not always incredibly clear when you're placing a standing order if it's going to be the best for what dollar age brackets, and exactly what catalogs are going to be filled by this order. When does it start losing out to other ones? So we just put together a fairly quick analysis of essentially a lot of hypothetical catalogs that could come into the platform, and then use our matching algorithm to see what multiples were at different dollar age ranges. So I'll share my screen really quick to show this off. So essentially we have a table here with dollar age on the x-axis up here, and then last 12 LTM on the y-axis over here. Dollar age increases this way, LTM increases down here. And then each cell in this table represents a hypothetical catalog. So this one in the very top left, if you can follow my cursor, is a hypothetical catalog with a dollar age of 3, LTM of 1,000. This one here in the middle has a dollar age of 5.5, LTM of 11,000. So what we did is we took each one of these hypothetical catalogs, ran the matching algorithm against all of the current available standing orders. And this is for just 10-year term orders, by the way. There's another table for life of rights, which is out there. And then we saw what multiple matched to that catalog among the dozen or so orders that are competing. So for instance, this one in the top left, the highest matching multiple is 3.25 times. The one down here that's 11,000 and 5.8 is a 4.05 times. And that's kind of how it looks. So the color scale is the darker the green, the higher the multiple. And then this big red block here is there are no orders that match to these catalogs down here. And that's just because the orders that are from 3 to 4 years of dollar age, they run out of their order amount around between $7,000 and $8,000.
So let me just jump in real quick, if I
Yeah.
could, Reed, just to clarify a couple of things for the folks listening. So first of all, the reason that we've limited it to 10-year term assets with the LTM of 25,000 is because that is the limit that any royalty exchange member can leave a standing order for. In order to leave a standing order for 10-year terms above 25,000, or in order to leave a standing order for life of rights deals, you need to be an all access member. So that's why, just because this is a broad, this is calls for all royalty exchange investors, we're focusing the analysis on the assets that you can actually make standing orders for, just so you guys understand why we're doing that. So back to you, Reed.
Sure. No, that's a good clarification. And also this table is kind of capped at 25,000 because any catalog that has greater than $25,000 in LTM will be shown a life of rights offer. That's kind of the cap, the eligibility for life of rights is 25,000 on a very broad basis. So really the two questions that we're trying to answer with this analysis are there gaps where a catalog could come in and it meets all of our eligibility requirements, but it doesn't get shown an offer because there's no offer available for it? And then the next level thinking of that is, are there scenarios where a catalog comes in, gets an offer, but that offer is vastly lower than what we'd expect as a fair offer for that? Obviously, that's kind of damaging to us as a marketplace. If people are coming in, they're seeing automatic offers in their catalogs, and they're much lower. There's a degradation of the trust in the platform if it looks like we're lowballing them, and it's incredibly unlikely for that order to actually get filled. So I'm trying to balance the two parts of the marketplace that way. So obviously with this big red block here on this table, it's clear that there is a gap. Answers that first question, and there is the gap between 3 and 4 years of dollar age. Someone could come in and place an order for 1 times earnings and capture this entire red block here. Of course, that kind of gets into the second question of that is definitely lower than what we'd expect as a fair market value for those catalogs.
So in other words, that offer would be, if someone were to come in and do what you just said, it was 1x, that would be the first thing that a catalog owner would see, but very, very unlikely to actually accept.
Exactly.
So there's two parts of this. One is, are you leaving an offer that can be seen by someone who owns that catalog, which is only step one. Step two is it an offer that the person who owns that would want to see? Okay, right. So you got to kind of consider both sides.
Yeah, exactly. And when it gets into
I think that's what that sweet spot is.
Yeah, the question of is it something that someone would want to see? We can answer with the next table, which I've called the multiple disparity table. And the way this works is we've taken the multiples that were being offered in the table above, compared that to our analyst benchmark price for these hypothetical catalogs, and then found the percentage difference between those two numbers. So the color scale on this table, the more red cells are, the less likely, the less of an opportunity there is to outbid someone at that level. So for instance, here, there's a lot of 5 times multiples in this segment. So unless you were, that's 10% higher than what our analyst benchmark is. So unless you're willing to outbid them there, that's not really a large opportunity. The more green cells are, the greater the opportunity to outbid someone and fill catalogs. So you can see that here between 4 and 4.6 years of dollar age.
Can you zoom in a little bit on that, on one of those segments, so they can see the cells a little bit clearer, because it's a little hard to see at this broader way. If you zoom in to like the darker one, there you go.
Yeah.
Sorry, I'm just the old guy here trying to talk for everybody else.
No, thanks for that. So yeah, like here are two kind of things, and these are kind of frontiers in between where one order starts to match above another order. So someone's placed an order between 4 at 4-year dollar age, and it's filling catalogs between 4 and 4.7, at which point another order comes in, outbids that order with a higher multiple. So the way recommend using this is looking at these frontiers and saying, okay, I'm probably not going to win if I'm trying to compete here between 4 and 5. I could outbid them. It's 11% below what our analyst benchmark is, but the big opportunity is here, say between 4.3 years of dollar age and 4.6. The multiple that is being offered to these catalogs in this range are 20% or greater below what we'd recommend as our analyst benchmark. So I could come in as an investor and say, I'm going to come in and outbid this guy maybe by 10%, increase his multiple there, and then fill for all these catalogs. Same thing for down here between, say, 3.4 and 3.9. You could come in, place an offer that outbids this 3.25 times order, and have more coverage in that way. Again, these are all hypothetical catalogs, so it's not necessarily a totally accurate representation of where the catalogs actually are. I think that's kind of the next level analysis that we can do on this, is showing where actual catalogs fall in here, which would give you more insight as to where the greatest opportunities lie. Say, for instance, there's a glut of catalogs that are between in this range here that are getting undervalued by 11%. You could come in and place an offer there. And then, of course, we have this big gap right here.
Yeah, let me just jump in real quick. So we've been mentioning this analyst benchmark a couple of times, and I just want to clarify what that is. Okay, so when you are in the secondary market, you could see all the different assets that are available that you could place a bid on. At this time, you have to be an all access member to actually see the analyst benchmark price that we set. All right, that's only visible to all access members. However, what we're attempting to do here is sort of do a workaround for that in a sense that allows you to get a sense of the real orders that are placed, and the percentage that you see here, you'll see are either above or below, as Reed mentioned, that benchmark price. The closer you get to that benchmark price, the more fair or competitive the offer might be, and the more likely that offer would be accepted should it be matched. So to clarify, one thing that Reed said is that while the different cells all represent hypothetical catalogs, the percent above or below the analyst benchmark represent real standing orders that could potentially apply to any such catalog should it come into the system.
Right.
Okay.
Yeah, and then the last thing I'd say is, like, the way I'd use this chart is identify these areas of opportunity, say between 4 and 4.6 on this disparity table, and then scroll back up to the matched multiples table and find, okay, I need to beat 3.6 times for that range. I can do that with, say, a 3.7 times offer still, and capture a little bit more of this area here. That's basically, the very basic overview. I think we'll send out this as a PDF after the office hour session, so you can look at it more in depth that way. But I think I'm happy to answer any questions about this, or if you want to move to the more general Q&A, we can do that.
Yeah, so I guess here's what we'll do. First of all, if anyone has any questions about what we just went through, please type it into the Q&A field. There was a chat message that came in asking whether there will be any way to reiterate how we started. The recording of this entire Q&A session will be sent one who registered. And in fact, I may even send it to the entire investor base. And we typically post them, and we will post them to our blog as well. So you'll be able to go and watch a replay of this entire session to get to hear the beginning of Reed's explanation on this. Secondly, we are going to start sending this graph out. I believe we agreed to a monthly basis because right now there's not enough activity to justify on a weekly schedule. But if that changes, we'll certainly speed up our distribution schedule. But for now, we'll create this chart and send it out to all investors on a monthly basis. And there'll be a link to an article and a post that explains what it is and how to use it. So this is going to be an ongoing thing, but this is just the very first iteration. As are people that are on this call are the first people outside of like 4 of us here at the company to see this thing. I mean, Reed hasn't even presented it to the entire company yet, which is going to happen later today. So you guys are in a fortunate place. So yes, there'll be a lot more explanation on this coming. So again, any questions on this, please type it in the Q&A. Otherwise, we'll go ahead and get started. Daniel, you sent in a question asking to reiterate where the sweet spot is. Reed, you want to just maybe address that real quick? I think we got it, but I want to make sure we absolutely certain that we answer the question properly.
Yeah, I think the biggest opportunities are where either the sweet spot would be for me here where there's no orders, so you could come in and place an order there and definitely capture a lot of this.
And so then that is vaguely between, those are 10-year terms at a dollar age of between 3 and 3.9 over $8,000 in LTM.
Right. Yep.
So go place your orders there now, folks.
Right. And then at the frontiers where perhaps an order was made at a 4-year minimum dollar age, and the multiple is placed that's kind of in the sweet spot for that dollar age. But as it gets a little bit, the catalogs get a little bit older before it meets a new higher order. These sections where the offers kind of start to degrade a little bit in comparison to what dollar age the catalogs are, if that makes sense.
Okay. I'm not seeing any other questions coming in related to this. Generally, these calls tend to bring in a lot of newer investors to our community. So this might be a little advanced or a little too down the line for some folks, and they probably have some more foundational questions that we can probably start addressing first. So we're going to go ahead and get to that. Generally, like I said, we start these things with something kind of new and different that we'd like to try to show off to folks. So hopefully some of this gives you guys some direction and some insight as to what happens there. Reed, why don't you go ahead and stop sharing the screen, and I'm going to go and start answering the questions that we were submitted in advance. So let's see here. The first question comes from what looks to be someone who's actually an investor in our company, not buying investments on the platform. And so I'm not going to get into the question, but I'm just going to say that if anyone is an investor in Royalty Exchange, the company shareholder, and has questions, we can't really address those questions in a public forum as a private company, but we're happy to answer them. You can email Rob directly, rob@royaltyexchange.com. So I'll leave that. Next is, let's see here, can Royalty Exchange find out if a catalog is available? I believe that means if there's a specific catalog available that they might be interested in buying. I'm going to take a stab at it, but Rob, jump in. Anyone who has a particular thought on this one, but we don't generally. It's not something that that we have a process for. I mean, if you ask if there's a catalog available, we could always reach out to a person and tell them, hey, someone's interested in buying your catalog if you're interested in selling. But that's typically not how the process works. It's usually someone coming to us with the intent to sell. And one thing I want to stress, and maybe even Ryan, you could kind of get into this point, is that the actual person selling the catalog, the actual the music and that it contains is less important than the actual earnings history of the catalog, which is kind of why standing orders are these blind orders that allow you to put in the types of financial and historical data that you're looking for, the dollar age, the LTM, etc. And you're not even really looking at the makeup, the actual makeup, the artist or the music when you're buying that catalog. So I don't know, Ryan, you want to give a quick 2 cents on that topic as well? Because I think that's important to note.
Yeah, I mean, I think you explained it pretty well, right? It's, I mean, when looking at something from a financial aspect, it's really about how it's performed over the history of it and what it would be estimated to do. I mean, any asset is a good asset to purchase at the right price. Um, Really, in most cases, no matter what's happening. And also, it's, when we're looking at these, we don't want to chase after these catalogs, right? Like, we're looking to auction them on a platform. And a lot of times, if you go out looking for something, we're going to get into an auction ourselves or something like that.
Exactly. So, and actually on the same point, I'm going to address a quick question that came in via the Q&A, which was, says that when we place a standing order, do we have a chance to review the match, or does it fill automatically? I guess I'll answer it. It fills automatically. You do have a chance to review the details upon signing the, I guess, the purchase order. I think that's true. Rob, is that right?
Yeah, no, if you put in your parameters for a standing order and it matches, then it is matched automatically, and it'll go through our process of purchase agreement.
Right, but when do they actually see the details in that process? Is it at the point of the purchase agreement?
Oh, at first we'll do due diligence on the asset. It'll say, your order has been matched, and then we'll make sure that the asset's able to be transferred, and then that'll take a few days, and then that's when we'll actually close out the order.
Right, but the question is, when the person placing the standing order, the buyer, see and review the actual details of the catalog that they're acquiring?
I think that happens at the purchase agreement stage.
Right, that's what I thought. Okay, I just wanted to double check. All right, I hope that answers that question. Next, let's see here. We have a person who sounds like a relatively newer investor saying that they're not familiar with the type of investment and wants to get a sense of how secure it is. And that's kind of an open question. So I think that what we can start by saying is that there's no requirement for anyone buying royalties on our platform to deposit money in an account that is then pulled from to buy the asset. Okay, it's not like you're filling a wallet of some kind on Royalty Exchange, which then when you buy something we pull from to complete the transaction. That's not how it works. You bid or make an offer, and if you win the bid, if you win the auction, if the offer is accepted, then there's a purchase agreement, and you are verified as an investor beforehand with the understanding that you will have the ability to transfer the funds necessary to cover the cost of your purchase within 2 business days. So hopefully that explains the financial details around carrying out a transaction. Guys, am I missing anything? I see shaking heads. No. Just so you understand, when I see your heads on my screen, they're very small. So when you're shaking them, I can't quite see it. So a verbal yes or no is always helpful as well. Let's see here. There's a question about a current listing that we have up right now, the Listerine listing. If you guys haven't seen, we have a really interesting asset up for auction right now. It is royalties on the sale of Listerine mouthwash. And it's a very interesting asset in that this is a royalty in perpetuity. There is no end date. Which has already survived a court challenge to confirm. And anyway, so the question here is that what agreement does Royalty Exchange have with Listerine to place this listing? And Rob, you want to take that one?
Real quick, Andy. I just want to make clear. Andy said that this one's in perpetuity, and that means that it goes on forever, right? Like you can pass it down through your generations and generations. Our life of rights royalties, we call them kind of perpetuity royalties, but they do have the end date of that life of the artist plus 70 years. So just want to clarify that.
Right. So the difference is that with the music copyrights last for the life of the last surviving author of the work plus another 70 years, and then they end and they go into the public domain. Quite a long time frame, right? Mm-hmm. This is actually longer. The agreement was that whoever distributes Listerine has to pay this royalty to whoever owns that slice of this royalty for the lifetime, for as long as Listerine is being sold. Okay, lastly, just real quick, a quick note for those of you that are leaving the messages in chat. So it's going to be a lot easier for us to see your questions if you type them into the Q&A and not the chat feature. It's a much easier. Otherwise, I'm looking at 2 different boxes. I'm going to miss something. Okay, so if you could direct your questions to the Q&A box, that would make it much more likely that I get to your question. So back to this one, back to Listerine. Rob, talk about the agreement we have that allows us to place this listing.
Yeah. Actually, so the seller is not Johnson and Johnson, the distributor of Listerine itself. The seller is a person who has acquired an interest in that royalty stream. So, over the years, the royalty interest has splintered off into a bunch of different owners. So the seller of the royalty is actually has been assigned this small percentage of the Listerine royalty stream. And I guess just to clarify what you guys are talking about as far as perpetuity goes, is really lasts obviously as long as Listerine is sold. I think I just make that obvious point, obviously, and
Right.
part of the court decision when the payors were trying to end their obligation to make the payments, the court says you can stop making payments, you just have to stop selling Listerine, and obviously that's hasn't happened since
Right.
1881. So
Right.
um, that's where that is.
Yeah. So for we've had a few questions come in on occasion around this particular asset. This is a royalty that has been paid since 1881. The companies, any company that gets transferred the right to distribute this product, like now it's Johnson and Johnson. It's been several different companies beforehand. Companies merge, whatever, this kind of thing. The accounting practice that's been established to send the royalties people who own a share of this royalty stream now is well established. It's 140 years established. There's no question mark as to is anyone who buys this going to get their royalty stream. This is, it started off going to one person, and then the agreement is for him, his heirs, and their assigns. And the heirs have sold portions of that interest to other people, and that has fractured out and sort of splintered to different entities and organizations, pension funds, universities, large charities, individuals, things like that. So this is a well-established chain of ownership and payment that is about as rock solid as it gets. So let's see. I'm gonna get to. There was another question in actually via email that I'm gonna go ahead and ask just because it's on the same topic. And let's see here. There was two questions. One is that the Listerine royalty is described as being based on the number of ounces sold. So the question was, does that mean that it's a fixed amount based strictly on the number of ounces, or does it somehow fluctuate? So Rob, you want to start with that one?
Yeah, no, it is a flat rate. So the original agreement, and it was amended a couple of times, so that they landed on $6 per gross, so 144 bottles, and they only sold it in 14-ounce bottles back then. But now, obviously, they have a bunch of different sizes. So what they did was they basically just took $6 per gross, and how many ounces are in a gross of 14-ounce bottles. I think that's something like 2016. So then they take the ounces, divide it by 2016, they get the gross, and then that's how they get the $6 per gross royalty amount.
Right.
So it doesn't change or fluctuate. It's a flat $6.
Okay, and there was another question looking at the data about a jump in the royalty amount that occurred in 2012. Royalties were at a certain rate, were being collected in a certain range, and then at 2012 they jumped up significantly, and the question as to what was behind that jump. The best we could say is that we've reached out to Johnson & Johnson to ask for an explanation. We have not received for that yet. That's about as much detail as I can provide right now. That the simple answer is we just don't have the information as to what was behind that particular spike. Anyone else want to jump in on that before I move on?
It's good.
All right, great. All right, so there's a question here about how are payments arranged and how soon after the auctions are over will payments begin? I think that's a Rob question, right?
Yeah. So it really all depends on the underlying distributor's payment schedule. ASCAP and BMI, they pay quarterly, and publishers often pay twice a year. So it'll really be dependent on when the auction closes, when that next distribution is made, and then what happens is you'll enter a accounting agreement with Royalty Exchange. We'll receive payments on your behalf, and then we'll turn those payments around to you. The agreement gives us 30 days to do that. Internally, we strive for much faster, and I think we have been averaging under 8 or 9 days over the last 6 months, I think, or so.
Okay. Thank you. There's another question here about minimum offers. How can we see the minimum offer in advance or of making an offer that will be automatically declined? So let me give a little background as what this question is for. So we recently added a feature to the secondary market In fact, let me take a step further back from that. So the secondary market is where anyone who has acquired asset on Royalty Exchange can have their asset relisted for review and for other investors to make an offer. So if you want an auction 6 months from now, your asset is on the secondary market, and another investor on the Royalty Exchange platform can make an offer to you directly saying, hey, I'd like to buy this asset that you acquired 6 months ago. Here's how much I'm offering you. And you could accept or reject it. All right. What we've done very recently was we added the ability for you as the owner of an asset on the secondary market to set a floor for how much of an offer you'd be willing to accept. So like if someone sent you a really lowball offer, I'll give you $2 for it, right? Like they were getting those emails before, which was resulted in a lot of alerts and a lot of notifications, and those get a little burdensome. So they now can go in and set a price limit for anything under this amount that gets offered, just automatically gets rejected by the system, and they don't have to get no notification. This question is, how is it possible for someone who wants to make the offer to see that minimum offer? I don't believe that's a feature that we have planned. Reed, you want to jump into that one perhaps? Since you're on mute, just so you know.
Yeah. Can you rephrase that question?
So basically the question is, would it be possible for someone who wants to make an offer on the secondary market to see the minimum offer set by the asset owner?
Yeah, we talked about that when we were first implementing the feature. And after you make an initial offer, so say you make a really low ball offer of $2, you'd then see what the price floor is.
So the notification back saying that your offer has been rejected will list the minimum offer.
Correct.
I don't believe there's any plans to add that minimum offer to the actual asset interface on the site at this point, correct?
Right.
Okay. All right, moving on then. Thank you, Reed. There's a question here about what's needed to transfer the rights and the process behind the transfer once there's been a sale made. Let's see. I think Rob, can you answer that one a little bit? Like, how do we handle the transfer?
Yeah, certainly. So the way that it works is the auction closes. We will send out the standard purchase agreement. There's an accounting agreement that you will assign Royalty Exchange as your administrator. We'll collect those royalties, like I said before, and really each different distributor kind of has their own different paperwork. Some have a specific form that needs to be filled out where the seller sends an assignment of their royalty stream to Royalty Exchange on your behalf. Sometimes it's a letter of direction for a publisher or label. So there'll be a document on file with whoever the underlying distributor is that those royalties have been assigned.
Okay. And Ryan, you're going to be on next for this next question, which was, how do you evaluate catalogs?
Yeah, so I mean, just how we evaluate them, traditionally what we're going to look at is going to be the dollar age, which is, the main thing that we look at when evaluating these, to see how far they're along in their life cycle, or in their earning cycle, I guess is more accurate. We're going to look at that. We're going to look at the source of the earnings. Again, you want to see a decent amount coming from streaming. I at least look for 30% or more. You also want to see whether it's, the trend of the royalties. So is it growing? Is it, staying pretty stable? Is it declining? If declining, how much is it declining? And so those are going to be kind of the primary features we look for. And as you notice, right, I didn't mention really anything about the genre of the music or who the artist is, that sort of thing. It's always good to look at that after you've evaluated the financials, but I don't really like to let those things influence a decision one way or another, because I think they just add more kind of fuzziness to the catalog rather than clearing it up.
All right, great. Thanks very much. Go ahead and shift to one that just came in via the Q&A, which was a repeat of the question that we answered earlier, which was, does Royalty Exchange have access or can find out if a certain catalog by an artist or songwriter is available? And so again, we don't do that we don't have a function that allows people to, at this point, to request hey, I would like to buy, Charlie Puth songs. Can you go see if any of are available? That kind of thing. So, because the idea is that as an investment, what you're looking at are assets that have certain characteristics. How long have these assets been earning? What is the trend rate of their earnings over the years? What is the last 12 months of earnings that I could apply a multiple towards? These are the quantitative metrics that we encourage investors to focus on when they're evaluating whether or not to buy a music royalty as an investment. The name of the artist, the genre of the song, these are things that are more considered qualitative metrics. They might be important for some investors for certain personal reasons, but from an investment reason, they're generally not as important as the other quantitative metrics. The quantitative metrics are metrics that you can compare catalog to catalog to catalog to catalog to catalog, and they're apples to apples comparisons. But when you start to get into the name of the artist, or the name of the songwriter, or the genre of the music, those are not comparable across the catalogs. So it makes it virtually impossible to evaluate one catalog over another based on these things that aren't apples to apples compared.
Yeah, and just to touch on that too, I'm not saying that those aren't important or they in the way or they can't be used to make a decision, but in the type of investment that we're offering, a passive investment, looking for income, it's not something we focus on. I mean, like Warner Music Group, Anthony just sent out a report on this. They spend like 50% of their expenses are spent on those metrics, right? So it's not a
Right.
game that we really want to compete in.
Exactly.
And unless you're a professional, I don't know if it's a game that someone would be able to compete in up to a level like an expert.
Exactly. See, so like we're not A&R. So A&R is what you're referring.
Yeah.
Is what is called artist repertoire. It's a component of the music industry, record labels in particular, where it's basically scouting. I mean, there's a lot more to it, but essentially A&R is finding new artists. Hey, we think this has potential to sell. Using that sort of the dark arts of the music business to kind of know what's got the right tone or the beat or the look or that's not us. We're not A&R folks. We don't have that. We don't have that ability. We don't claim to, and we certainly don't recommend our investors try to adopt that same type of expertise. Instead, what we do is try to focus on the investment analytics that we think are a little bit more applicable across a wider, broad variety of.
Correct. Yeah, and I guess my last point on this would be
catalogs.
just that if you're just looking at the financials, it doesn't matter, and say it's just earning a stable $1,000 every period, just for hypothetical stake. It doesn't matter if it's the next big artist, if it is a big artist, or if it's a nobody. I mean, if those financials are reliable, that's what you want to focus on, and
Exactly
make your offer off of.
Exactly. All right. Next question here is it possible to sell a royalty asset I've bought after 2 to 3 months of owning it? Absolutely. That's what the secondary market is for. And so one of you guys jump in and tell me if I'm getting this wrong, but there's a certain point, I'm not really clear on exactly when this happens, but after you acquire royalty on royalty exchange, an asset platform or anywhere else, it will list on the secondary market. I think you can request it not be listed, but for the most part, it's there, and that's the liquidity option for you. And if you're particularly interested in selling it and moving it, you have the ability to set a list price. Now, not all assets on the secondary market have list prices, but if it's something that you do want to actively try to sell, set a list price, set a competitive list price that's going to draw an offer, and it'll move. I mean, we do see offers made regularly on the secondary market. The standing orders that people leave can be matched to secondary market listings now. So there are lots of assets. The way to do so is to set a list price that is that gets you the return you're looking for, but is also competitive to want to entice someone to actually make that offer.
Yeah, right. Just to touch on that real quick, it takes about 60 days, I believe, is our maximum on that.
For it to appear on the secondary market initially?
Yes, it's roughly 60 days. But remember, this is only for PRO assets, BMI and ASCAP. You cannot, Sony, UMG, Warner, those will not list on the secondary market.
Thank you for reminding me of that. I always neglect to mention that. So yes, that's a very important point. So what Brian's talking about is that there's different royalty exchange in terms of what the royalties that you're collecting and who's distributing that. And for the assets that are considered public performance royalties that are for sale on the auction house, those are distributed by organizations called PROs, public performing rights organizations. Those assets are those that are the ones that we can list on the secondary market. There are other assets that you can acquire that are publishing assets that are paid by a publisher, or perhaps they're sound recording assets which are paid by a label. Those assets at this time are unable to list on the secondary market. However, you can still sell those. It would just mean basically you would now be the seller in an auction. So it's still equally possible. It's just a slightly different format, and the auction might take just a little bit more time to get up and running than it would be in the secondary. That's to say a couple of days versus like immediately. So yes, you can absolutely sell it. Thanks for clarifying that, Ryan. Another question here is about placing a bid means submitting. Does placing a bid mean submitting financially? What happens to my finances if I don't win my bid? So let me just reiterate, no, you are not submitting any money financially to royalty exchange to hold as you are bidding on assets. What we do is that for anyone who is registered as an investor for royalty exchange, before you're, if you place a bid and it's the first time you've ever bid, preferably you do this in advance, but we need to hold a verification call with you where we kind of run down what happens in auctions and on offers in the secondary market. And as part of that verification call, to become a verifier, what we do explain is that you win an auction with the bid that you've placed, or should you make an offer that is accepted, you have to understand and agree and confirm that you have the ability to send payment for that asset in full in 2 business days. And if you don't have that capability, then you will not be a verified investor and you won't be able to place bids. And I'll add one other point, that if you assert that you can, and then for whatever reason you can't, and there's a problem with transferring the money, the funds within the time frame provided, that will affect your ability to place bids in the future. So that's basically how that process works. But there is no upfront need to submit funds until there's actually a purchase agreement signed, an invoice sent. All right, so I'm going to address the last question we got in advance, and then I'll switch to back to the ones that we've been receiving live. This is my favorite question, which is, what are the secret hacks everybody here needs to know today? Which is just wonderful question. I mean, there's lots of little fun nuances in this. So what I'd say is, Ryan, why don't you say, what's probably the one thing that anyone who's maybe new, or, like, what's the, as the guy who analyzes all of our royalty streams that come in, what's something that they really should keep in mind as they're evaluating these assets on the platform?
So again, it's going to go back to dollar age. I mean, I guess the sweet spot or the secret would be 5 years plus. Right. Those have shown to be the more stable assets. Those have shown to have the better returns. I'm a little hesitant saying that again, because it's all based on price, right? But it's going to be dollar age, 5 years plus. I mean, if you're really looking for a quality asset, 50% more streaming or more, and that is not declining more than 5% a year. Best of the best is going to be stable or actually growing. But those are going to be kind of the best parameters to look for in an asset. And then, the other things are just going to be, don't bid on a 10-year auction. Don't bid things up too high where you can't get a return, right? Like over a certain multiple, it's extremely hard for you to get a decent return. And, just not being emotional about an asset, especially on the auction side, right? Don't keep bidding it up past your point that you've set in advance that you want to pay for an asset.
Yeah, I think you and I talked about this before, Ryan, related to, we're working on some features that will allow for more of a rating for these assets. Yeah. And the rating that we would be based on is like dollar age, to use a music industry, just any music analogy here, just because I like to, like dollar age is the volume, and trend rate, and I forgot the other one, Ryan, but trend rate and something else were like the bass and treble.
It's going to be like the source, right? Like trend rate.
Trend rate and source of earnings. Okay, yeah, so that's what it is. So yeah, so dollar rate, just to quickly explain for those who might not be familiar, dollar age is the length of time that the asset has been earning royalties. So in other words, if an asset earned $5,000 last year, if you had 2 different assets that earned $5,000 last year, the one that has been earning royalties for longer, those $5,000 are considered more valuable than those that have been earning royalties for a shorter period of time. So they both might have the same amount, but the length of time that they've been earning royalties gives the value of those last 12 months earnings, well, more value basically, when it increases. Okay, so that's that. Trend rate is, again, is
Yeah.
the earnings going down? How steeply are they going? Are they going up? Are they even? That's what trend rate is. And let's let me get to the last one before you correct me further. And then the source of earnings is from where are those dollars coming from? Are they coming from streaming, which is aligned with industry trends and increasing, or are they coming from vinyl sales or something, which is probably as a format less of a positive trend? Okay, Ryan, what did I get wrong?
Yeah, I was just going to say is that the trend rate, you did a good job of explaining it, right? It's just the trend of the catalog. I mean, again, it's solely just extrapolating the past into the future, but we also normalize earnings out, right? Like we don't let large one-time payments affect the trend rate. So when we say trend rate, that's what we mean is that that normalizing trend, that underlying cash flow that you could reliably expect on going into the future if everything from the past held true.
Okay, thank you. All right, I'm gonna get to a couple questions left here. We've got, I'm gonna address the Q&A ones first. I see there's a couple questions sent via chat, but it's always easier to do so through the Q&A field. So the first one is, back to the standing orders again. Is the commitment to purchase through a standing order, or is the purchase agreement stage the commitment? Just want to clarify how serious the standing order commitment is. I would say the standing order commitment is very serious. Do not leave a standing order for any amount unless you're willing to pay that amount for the asset sight unseen. And if you're not willing to do that, don't leave a standing order. I think that's about as clear I can make it, right?
If you get filled on a standing order, you're expected to buy the asset and pay for it, or else you won't be able to place a standing order in the future.
Right, exactly. That's the idea. And that's okay. Some people really want to know what it is they're buying there, and they have certain feelings around the types of music or the genres and things like that, and that's fine. And then the auction platform has all that information there. But standing orders are meant to be just far more quicker. The genre and the song and whatnot for most of the folks that are leaving standing orders really isn't important to them. All they're concerned about is the rate that it's earning and its earning history and its potential to earn and things like that. So there are different formats for different types of investors, and that's why we have those there. Another question kind of goes back to the Listerine. How many other products do we offer that have that sort of eternal perpetuity of royalty streams? I think it's the first one I've ever even heard of, let alone made available. I don't know. I'm not sure how. Even trademark royalties at some point end, do they not?
That's right. Yeah, we've done a few trademarks deals. We did Cherry Garcia ice cream from Ben and Jerry's. That was one of my favorite ones to work on. But no, this will be the first one where we say perpetuity, but it's as long as Listerine is sold. But it's also one of the only ones that we've had seen where the obligation to pay was specifically upheld by a federal court. So it's a precedent-setting case there, which is kind of fun too.
It's incredibly unique. It's incredibly rare. And Rob, tell me if I'm wrong here, but I believe that this is a case they actually study in contract law in law school.
Right. Yeah.
To say don't make, if you're a company paying the royalties, don't let yourself get sucked into a deal like this ever again. This is bad. Like, this is not good for companies don't like this.
Well, yeah, it's really just goes to saying the contract is what you said it was, and we're going to uphold it absent something else. So it was cool.
Yeah. But on that note, I mean, we don't typically proactively seek out trademark royalties and these other types of things. Our basis as a business is on music royalties simply because the volume is so much greater in that space than anywhere else. And so even just a small percentage of either performing or songwriting artists that need to work with us to raise money is all that's necessary to really provide a robust marketplace, right? If we were, the amount of time that would take to spend, tracking down more trademarks, things like that, you'd still only get a handful a year at best, whereas we can do dozens a month in the music space, and so that's why fashion. But that's to say, when it comes across our desk, we're more than happy to review them. Ryan, here's a question for you. How accurate are the theoretical cash flow charts in the financials tab, and how are those projections calculated?
Yeah, well, I mean, the accuracy, I mean, it's hard to calculate. I mean, we've only been doing them for, 2 years, maybe a little longer than 2 years, right? And they're projecting out 10 years. I mean, the thing to remember is that essentially what the cash flows are and why we develop them is it's a way to compare every auction on our platform, right? Every auction on our platform uses this same model, so it makes each one comparable. And we don't look into the catalog specifics other than the dollar age and, you know, the trend of the earnings. I would say, I mean, they definitely vary, right? That I always encourage our investors to do their own, you know, develop their own model and do their own work on it, and just using our cash flow model as a starting point, right? All we are doing is taking the past and extrapolating it into the future. You know, the future is uncertain and it's hard to determine, so there will be variation from those cash flows. As far as a actual like percentage of how they're accurate, I'm not sure. I don't have a specific number on that.
Okay. Just to be clear, we call it theoretical. This is more of a guide. We're just trying to provide you with a baseline of analysis, which you can adjust based on your own assumptions in any way you like. But we always prefer offering something that you can edit and react to than to just sort of throw it up there and say, figure it out. You know what I mean? So that's kind of the idea. Let's see, I have 2 more questions here, and then we're out of our questions. So if you have any last thoughts, please do put them in before we wrap up. There is one question that came in via chat related to, let's see here. I'm not sure I understand the question fully. It relates to expanding our capabilities in the context of the enterprise copyright system monetization. I'm not familiar with what that even is. I may have to, there's an offer to answer this question offline, and I will take it so I can have the ability to better understand what the question is and what we're getting at. And I'll be happy to answer it, and I'll email you separately to get a better understanding of what we're talking about here. And then the other question also is on thoughts on Hypnosis achieving a $12,000 per song return versus the industry standard of under $2,000 per song return. First of all, I don't know where those figures came from, so I'm not doubting them, but I'm not familiar with Hypnosis claiming 12K per song return versus the industry standard 2K. But generally, I'd start by that. You know, the Hypnosis catalog is a cherry-picked catalog. So just to take a step back, Hypnosis is a public fund. It's a public stock out of the UK stock market. They've raised money. They go out and they buy catalogs, songwriting catalogs and others, and then share a dividend based on the performance of those catalogs. So essentially, on royalty exchange, you come in and you buy the catalog that you want and you earn the royalties directly. You might buy 3 different catalogs and earn from 3 different royalty streams directly. Hypnosis basically functions as you. They go out and they buy these catalogs themselves, but then share the returns from that with shareholders. Okay, the difference being they're doing so at a far higher level, scoring multi-million-dollar deals with some of the top songwriters and larger catalogs in the market, whereas we deal more with individual songwriters and partial catalog sales. And not to say that Hypnosis doesn't do partial catalog sales as well, but I'm just saying it's a different, like they've done, I think 52 deals in about a year and a half, and I think we're getting close to 1,000 deals with a far larger degree of our greater range of artists. So we're not in competition with Hypnosis by any means on that front. It's just a different type of strategy, basically. But anyway, going back to the question, which is the difference between the two. The industry standard is based on every song ever released versus the 52 or whatever, the 13,000 songs from 52 artists that Hypnosis. Difference there. I think it's right there. They're identifying, they're buying those songs and then are reporting on the returns from those proven winners versus the industry at large, which is betting on everything and are going to, by naturally, you're going to get some winners and a lot more losers. And it's just that broader range of potential returns that you're seeing the difference of. That's how I'm going to answer the question. Ryan, jump in.
Yeah. Also, again, I'm with Andy. I'm not sure where those numbers came from, but Hypnosis is also, they're actively managing these assets, right? They actively look for sync. So, obviously when you get a copyright and you're actively managing it, you're probably going to monetize it a little better than a passive asset where you don't have that ability. Also, based on their last report I read, I believe their average multiple they pay is 12.75 times, right? Again, right, because once these are industry experts as well. I believe Merck was a manager,
Correct.
or yeah, okay,
Yes.
yeah, right. So these are industry experts, and that goes back to what we were saying earlier, about the whole, not betting on the artists and what, but betting on the financials, right? They're paying more money for these assets. They are able to monetize the asset because they are actually taking the copyright, and they have that expertise to make those bets on, say, newer artists, or even on the older ones. So I'd say it's not apples to apples when we look at this, right? Like, you're on royalty exchange, it's a passive investment. You're also, you're not paying an average 12 times for what you're buying, right? So I'd say that, that's certainly something to consider when looking at that breakdown.
Yeah, no, it's just like, I mean, I don't know if the scenario exists, but I don't see any reason why it wouldn't potentially exist, where songwriter A could sell their catalog to Hypnosis, and then there's another songwriter involved that has a different share of those songs that then lists their share of their songs on Royalty Exchange. And you could literally acquire a catalog on Royalty Exchange that is also owned by Hypnosis and being actively managed, and you benefit from that in a passive way. I mean, that's kind of the general layout. That's the difference here. So let's see here, just real quickly. One came in. Would you characterize Royalty Exchange more of a short-term or long-term investment concept? I would say definitely long-term.
Long-term, yeah.
Right? Without a doubt. I mean, some people collect, they realize their returns and then sell the asset that they acquired. And then the total return that they calculate is based not just on the price that they got for selling reselling the asset that they initially acquired, but also the returns that they collected along the way while they owned it. All right, this is going to be the last question here. I guess, why do you think Hypnosis pays average of 12x? Well, they're very much cherry picking the most proven winning catalogs that they can find. Richie Sambora's,
you're going to get that monetization, right? That active management, let's say, right? Active management, that's going to increase the value of it. The expertise that they offer, right? And the fact that, and you said, right, they're cherry picking, right? If a songwriter meets our criteria, we're going to list it. It doesn't matter to us whether it makes, $2,000, whether it's from some niche artist that no one knows, or, the next big hit. So I'd say that's why they're able to pay more.
Yeah. And there's also more competition.
Yes, that's a very good point.
Larger publishing companies, labels, and things like that. So like just from what I read in the press about what's happening, I know a lot of the more traditional catalog acquirers are saying that Hypnosis is overpaying, and that might be true. I don't know. It doesn't matter. They pay what they want to pay to own it. You know what I mean? They have a certain idea in mind, and that's totally fine. But it's the same thing like with us. It's like these are the people. A lot of the people that we work with on Royalty Exchange in terms of the artists. They're not the ones that Hypnosis is looking for to buy. Right? They don't have as many options as these as like the Richie Samboras from Bon Jovi, or I forget. Top of my head some of the other ones, but like these are the music industry is geared towards servicing the superstar. Okay, and so there's a lot of activity up at that top, let's say 20% level of earning artists, songwriters, and whatnot, and then everyone below that gets completely ignored. Okay, and so we operate, we have a foot in that superstar camp without a doubt. We've worked with Cage the Elephant, we've worked with many other artists. I'm just spacing on the full list of names right now, so please jump in with names as you think of them. Cage is the first one that comes to mind, but we typically serve and are a more democratized option for the other 80% that does not have an option for them, but have an asset that is valuable. It may earn only $10,000 a year as opposed to $10 million a year, but it's the same investment strategy. And that's what allows an individual investor, like the folks on this call, to acquire those rights where they would never be able to probably on their own acquire the Richie Sambora catalog, for instance. I mean, then that's sort of the difference, and I'll leave it at that. I think we're about it. Just one more.
Hey, Charlie, thank you. And duly
Just
noted on
Charlie-
Ryan's shirt. We gave him the business right before we started on that. So thanks for noticing.
I love that. I love that. We also want to find Ryan a collar to wear on the next call. So I guarantee you he'll be wearing a suit and tie next time, just to get under our skin. And then just one I saw coming in via chat was there's a lot of money in the reversion copyrights infringements in the next 18 months. So right to reversions, that's an interesting place. I'll very briefly touch on this. Basically, when a songwriter signs a publishing deal with the publisher, they have the ability after a certain number of years, I forget, it's like
35.
35, thank you. 35 years after they initially signed that agreement, they have the right to take their copyright back from the publisher and either self-publish or sell it to a different publisher. Almost in almost every case, all it really does is it resolves a renegotiation of that publishing deal. So they end up with the same publisher, and the publisher just gives them a different financial, scheme for it, basically. So that'll be very interesting. So, all right, that's it. Thanks, guys. I hope we appreciate it. We are going to send out the recording for this later on. And any questions you could always ask via investors@realtyexchange.com. And we'll see you on the Q&A call for August next month. Thanks very much. Bye, guys.
Awesome. Thank you.